The Bank of Korea today opted to leave interest rates unchanged at 2.75%, going against a large constituency of economists, many of whom believed the central bank would give in to government pressure for all-out stimulus measures. As geopolitical tensions grow with North Korea, I'm joined on the phone now by Maritza Cabezas of ABN AMRO to discuss what impact this could have on the South Korean economy. Hi Maritza. Today's decision has been described as economics prevailing over politics. Would you agree? And in your view, was this the right move?
Well, I believe that Bloomberg consensus was split. It was nearly equally between 25 basis points rate cut and on-hold expectations. And instead of a rate cut, the Monetary Policy Committee decided to use other instruments. It increased the policy lending window earmarked for small and medium-sized companies, and it cut the base rate to 0.5%. But it's not said that there won't be a rate cut further down the line. We still see a possibility of a rate cut in the first half of 2013. We think there is room for more easing because of the inflation and also because of the low growth, the GDP growth. The economy still could use some stimulus. So we don't rule out a rate cut, but it could be, wait and see given the uncertainty now.
Despite heightened tensions with North Korea, foreigners' net investment in Korean debt rose by 1.49 trillion won, or $1.34 billion last month, from February's figure of 3.53 trillion won, with data also highlighting that Korean bonds are yet to lose their luster as foreign central banks continue to increase their holdings in South Korean bonds in March. What is it about the South Korean economy which remains attractive to foreign investment?
Well, I think that these are considered episodes by investors without a long-lasting impact. Although politically important, investors usually weigh this on the back of the strong economy. The World Bank, for instance, has South Korea as the 15th largest economy in the world. And we all know Korea has grown to be one of the world's largest automobile producers, coming around fifth after the U.S. So South Korea has also one of the biggest shipbuilding plants in the world. So Korea ranks high also in the World Bank's Doing Business Index. So I think there are reasons to stick to South Korea.
The central bank today also downgraded its growth forecast for the year to 2.6% from a January estimate of 2.8%. With a stagnant property market and growth hindered at less than 1% for 7 consecutive quarters, combined now with the threat of a nuclear war, are there concerns that this geopolitical tension will severely impact South Korea's economy?
During the Monetary Policy Committee's press conference, the government noted that the Bank of Korea had reduced its annual growth forecast to 2.6%, but it's largely on base effects from 2012. And he also clarified that the new forecast, so the 2.6%, assumes no spending stimulus from an upcoming supplementary budget of the new government. So the slowdown is not reflecting costs from the tensions, and we think that so far the impact is small compared to the size of the economy.
Maritza, what could this situation end up costing South Korea?
These calculations are always difficult to make in the midst of an event. It depends on the duration of the tensions and how proactive authorities are in countervailing the costs. So far, the impact is small. Markets had initially muted reactions. There are some effects on tourism, of course. A number of countries like Taiwan are advertising tourists not to travel to South Korea. There are also losses around the disruptions of the industrial complex in North Korea. But as already said, compared to the size of the economy, they remain small.
Some of this pressure has been felt in the Korean won. The currency has depreciated significantly against the US dollar in recent trading, with upward pressure remaining on the Korean won against the Japanese yen in the wake of Japan's announcement of aggressive QE. What can we anticipate from the South Korean currency in the coming months?
Indeed, the South Korean won was a major underperformer due to continued weaknesses in the Japanese yen and escalated tensions surrounding North Korea. On the exchange rate, especially regarding the yen, the governor of the Bank of Korea noted that exchange rates should be determined in the markets, and existing measures could control extreme volatility. In other words, the government doesn't seem to favor currency wars. We will be publishing our foreign exchange quarterly next week. Given that we don't expect tensions to end shortly, we will probably be revising our forecast for the Korean won to show more pressure. But this is a topic for our foreign exchange specialists.
That's all we've got time for, but I'll be back tomorrow with a look at one of the last headlines of the trading week. Goodbye for now.